Are you a sole proprietorship, LLC, or partnership? Then you could be getting overtaxed. My name is Paul Vasquez with Tax Lab, and you need to become an ethical millionaire. If you're a small business owner and you're kind of doing things the right way, then of course you're going to get some 1099s. And in a way, you should be offering those W-9s as part of your hiring pack when you're going out there and getting new customers, new clients. If you're providing a service, I would put together a hire me packet. In that hire me packet, you're going to have your W-9, any insurance that's required, anything that a client would ask for. Licensures, those types of things that a client is going to ask for, you would want to preemptively provide that. That shows a high level of professionalism. You're not trying to skimp out on your civic responsibilities. You're not trying to cheat the government. If you're not trying to cheat the government, it's less likely that you're willing to cheat a person who doesn't have a military. But here's what happens sometimes. Even with those W-9s, what can happen is that on the other end, when they issue that 1099, they may be including things like taxes and products. So if in the process of providing a service, you end up selling items with that, and those items end up on your invoices, and they end up in the fees somehow, and hopefully you're paying your sales tax on that if you're collecting any. But you don't need to be taxed on sales tax, right? That was not part of your income. Sales tax collected is not your income. And so when you get that 1099 at the end of the year, you do not want that to include what the total amount that they paid you. If some of that includes sales tax, if some of that includes any fees that you directly gave them, right? For instance, maybe you charge them the shipping fee. So that's not your income per se. That is just you offloading those shipping costs. And then, of course, the cost of any product that you are reselling to them. So these are types of things that could end up being reported on that 1099 if they don't have good record keeping. If they don't have good record keeping, they could be sending you a 1099 at the end of the year where you're having to pay income tax on things you do not owe income tax on. So what's the solution? The solution is this: good bookkeeping and good follow-up. So what you should be doing is sending out a reconciliation form. You should send out a reconciliation form either on a quarterly, monthly, or annual basis. And on that reconciliation form, you put down what you think. Put down the list of all the invoices that you sent them, of the portion that's for labor, the portion that's for the inventory or whatever it is that you're reselling to them. And then at last, or if the new item, maybe you're putting assembly or something and you sell them the whole product, right? And then the sales tax or any shipping fees that you might be passing along to the client. Postage, maybe you're passing along postage to them at the rate that they were at that date. So all those things you shouldn't be taxed on. So you can separate that out for them and give them a total and say, hey, this is kind of what I'm expecting so far on that you might send me on a 1099. So that way, when it comes at the end of the year, you can compare it against that and say, hey, remember how I said this? You've actually included the full amount. Could you maybe reissue this correctly so that way I don't have to charge those things? Now, the other end of that is that, of course, on your other side, if you are having them exclude those items from your income, then you can't claim them as expenses as well, because it's no longer your expense, it's their expense. They're the ones who should be claiming that expense. You can't double dip. That would be a double dipper. No double dipping, right? Did you just double dip? Sorry, Seinfeld, if you've seen that one. You're a dirty double dipper. Okay, all right. Off topic, but nonetheless. Don't be a dirty double dipper. And don't overpay on your employment taxes, on because that goes for self-employment tax too. When you are just an LLC, when you're sole proprietorship, when you're a partnership, you haven't made any corporate election, not only is that income tax, that's self-employment tax. So whatever your income tax rate is, you need to add another 15.3% on top of that. So even if you're at a 10% tax bracket, right, that's 25.3% that you're paying extra in taxes that you don't necessarily need to. If you want someone in your corner, someone who's going to be looking out for you, go to lab.tax, click on advisory services, and you want to start with our comprehensive consult. Right? We want to make sure you start off and you have the tools that you need to start off smart, start off right, and get on that path to become an ethical millionaire. I wish you guys all the success.